gold got hit on Friday with the job numbers. Is gold going to go higher or is it going to continue to tank? Well, I'm going to explain. On Friday, the job numbers came out. They estimated 182,000 jobs the most, but it came in at 272,000. The bond market reacted, stunned. DLT, the bond market, tanked. Yields, interest went straight up. Gold came straight down, as did the miners and the gold ETF. How could it be 272,000 jobs? Didn't make any sense, because at the same time, they're reporting the unemployment rate's going up, and it did. At the same time, in the last 6 months, we've lost 1.6 million full-time jobs. May, of the 1.6 million full-time jobs we lost, in May, we lost 625,000 jobs. So how'd they come up with 272,000 jobs when they're telling us the unemployment rate's going up and we lost 625,000 jobs? Doesn't make any sense. Unemployment rate on Friday, they said, went up. Well, when was the last time the unemployment rate went up and jobs went up? Makes no sense. The unemployment rate is now the highest in 28 months. JOLTS, it's a measurement. How much demand there's out there for jobs, for labor. How many job openings? The report came out and said the demand is the lowest since February 2021. So let's summarize. So they're claiming instead of 185,000 jobs, they got 272,000 jobs. But at the same time, we lost 1.6 million full-time jobs in the last 6 months. In May, when they're claiming 272,000 new jobs, in May, we lost 625,000 full-time jobs. Also, the unemployment rate increased. The JOLTS report, which identifies how strong your labor market is, or how many job openings came in, it was a disaster. Lowest since 2021. So let's summarize. After 6 months of full-time job losses, we're left only with 133 million full-time jobs, and we have 223,000 part-time jobs. How did that happen? Well, remember Jared Bernstein, who's the president's right-hand man, his economic advisor, admitted in 2023 he fudged the job numbers 450,000 that we didn't have. Should he go to jail? No, it's legal. How does he do it? We have what they call the death system. If you take a look at the Federal Reserve, it's broken up in different groups, 11 different groups. When he breaks it up, they'll go into any of the groups and say, okay, how many people incorporated? So they'll come to my town like Sarasota, look up on a computer, say 3 people incorporated. Now we all know if 3 people incorporate, usually mom and dad and a couple of people work, and that's it. But what Jared does when he needs big numbers, because he wanted the market to rally, right? He wants big numbers showing we're creating jobs here at the White House. He does what he always does. He says, oh, look at this in Sarasota. Joe and Mary are starting a business. I'll bet you they're going to hire 75,000 people. You're only going to hire one person. This is what they do. Who put this in place? Joe Kennedy, President Kennedy's father, is still in place today. That's how they got those numbers, 272,000. Now, nobody believes it, but what it did do is affect the bond market. See, and that's the problem. This is dangerous. When they're giving us bad numbers and it affects the bond market, look what happened. The bond market dropped. TLT dropped. Yields went up, taking down gold and other stock. And the other part of this is when you give fake numbers or fake information, small businesses, households, they rely on that information to make decisions. Do I take a vacation? Do I add on to my house? And then when the real news comes out, they're stuck. Oh my God, I would have never done this. I would never add on to a porch if I knew this was, but they didn't say that. That's the danger. That's what's happening. So what do? Well, as far as an investor, we looked at our gold, and my subscribers are in 2 areas, 2 ETFs. GLD, that's the gold ETF. GDX, which is the miners ETF. Here, take a look. This chart here has been in existence now for almost 20 years. And this is time tested. My subscribers use this chart. Thank God we got this chart. Otherwise, we can't be listening to this nonsense. So if you take GLD, you can see we're up big time. We're up about 15-20%. Now we had a pullback because of that ridiculous jobs number. But this will guide us back to the top, or if it's going to affect it where everybody's going to sell their gold off and turns red, like here, we'll sell short. But that's not what's going to happen. Gold and gold miners and all these ETFs are going to go higher, not lower. Because smart money is not going to go and buy bonds for shelter. Things are going to get worse. Inflation is going to get worse. The volatility is going to get worse in the economy and the market. People aren't going to run to to the bond market. Smart money's going to run to the gold market. And that's what they're going to do. So all you have to do, again, is just continue to watch, is money going into these gold stocks or are they coming out? Here, I'll give you an example. Here's another one. Our spiders. We're always in the spiders. Look at this. We're up about 17-20%. Here's our buy signal right here. Turned green. We got out right here when it turned red. We're up about 14%. Then we added out about another 5% when we got in here when it turned green. It's Lumberjay right here. We're selling short. This is an oil company. And we started to short it right here when it turned green. When it turned red. See? We're doing nicely. We're up about 16% there. And you could be with us in these transactions. We're following the money. We don't follow the BS. That's BS we got on Friday. And now come Wednesday, they're going to give us more BS. The CPI is coming out, and they're going to decide if they want the market to go up or down on the information they're going to fudge. You know, and it's interesting, too, because if I come on the air on my radio show or on Instagram or YouTube and say, the market is going to go down, the market's going to crash, people get really upset with me. It's okay to have a skepticism or cynicism about the market. You have to. Look what happened on Friday. How can you not? But you must meet that skepticism or that cynicism with the strength to buy stocks when there's opportunities or short. And what gives us that strength is following the money flow, whether we're shorting oil or we're buying the semiconductors right here. So it's okay to be cynical, and you should be, because the four most dangerous words in the vocabulary, trading vocabulary, it's different this time. It's different this time. And if you stick your head in the sand and you don't deal with reality, and reality is what? Where's the money going? I'm going to buy or sell based on the money. So you can be a subscriber too. For 10 days, it's free. It works. Check it out. Also, please do me a favor. Hit subscribe, like, and when they report on the CPI, let's see how they handle that. If they're going to do the same thing they did with the jobs number, fudge it, and make the yields move. We're going to have volatility. But in the end, gold will win out. Miners will win out. ETFs will win out. Gold. Okay, so check it out. Go to my site, philsgang.com. Click the link in my bio.